Would you look at that? AUD playing out beautifully, which was of course broken down for the actual Forex Discord members. But let's get on with the video. How are we doing, everyone? Welcome back to my channel, and if you are new, welcome. Before the video starts, be sure to hit the like button, drop a comment down below, and thank you everyone who's been watching my content. I appreciate every single one of you, and if you're not enjoying my content, hit the dislike button. I don't really care either way, it's going to help me out. But I'll put my story today. Should I make a video on liquidity and concepts behind liquidity? Because as you guys know, how I trade is based off smart money concepts and all that good stuff. So I thought, you know what, let's make a video on that, a basic video talking about how we can use and identify liquidity in the markets to find trading opportunities. So if this sounds interesting to you guys, be sure again, hit the like button, drop me a comment and subscribe, because when I hit 1,000 subscribers, I am going to be doing a giveaway, because I appreciate you guys so much and everyone who's showing love to me, it means a lot to me. But let's get on to the breakdown and get this video going. Okay, we are on the charts, let's get this video going. So I'm going to be touching on the basics of liquidity. I don't want to go into too much depth, otherwise this video is going to be absolutely huge, but we're going to be touching on the basics of liquidity, how we can use it and how we can identify, and basically just what liquidity looks like in the market. Just a quick disclaimer, this may piss a few retail traders off. I am a retail trader, but these concepts are based on, obviously, liquidity that has been built up from retail traders, and then obviously the retail traders are the ones that get taken out and are losing the money. So I'm going to be talking about some terms and some patterns in this market that are very commonly traded, and it could annoy some people because you could trade it. It's not wrong. It's not wrong at all. Trade how you want to trade, and if you find profits, that I'm happy for you. But again, I'm not here to make friends. I'm just here to educate you guys and to share the value on what helps me and what I've learned. So the first two patterns we are looking at is going to be trend line liquidity. Okay, so what we've got on this left side pattern here is we have a simple downtrending market. And before I go into any more detail, what you need to understand is this is fractal. Okay, so what fractal means is this applies for all time frames, be it the 1 minute or the daily time frame. It's fractal, it applies for all time frames. So what we can see here is price trending down, and we are creating a trend line. What we're doing is we're creating equal highs essentially. Okay, price pushes up, pulls down, pushes up again, pulls down, creating a trend line. And you will see this everywhere in the market, and what we'll see is traders looking to trade from the retest or the rejection of the trend line, this example being a downside trend line. But the idea behind this is that there is liquidity above this level. Okay, what we have is the majority of retail traders, again, I am a retail trader, but that's just a term I'm going to use for the video, is we have retail traders placing their stop losses basically above the area of the trend line, above the trend line where price is meeting and in previous price action has rejected. But what's basically going on here is a build up of liquidity above this level. So essentially what we're going to need to see, or what we're going to see in order for price to move, is it needs to have fuel. And think of liquidity and stop losses as fuel. Price needs to take the stop losses, liquidity, in order to make its next move. So we may have price trending down, but what we're having is a build up of stop losses, a build up of liquidity. And what we can expect is price to eventually push through and take out any stop losses that are in this area, grabbing liquidity. So that's the downside example. And again, the exact same for the upside. We have price pushing up, pushing down again, creating an uptrending market, but at the same time creating liquidity below the trend line. Okay, so essentially what's going on is we have traders buying at this trend line with their stop losses below, creating liquidity, money below these trend lines. Price can come down, grab liquidity, essentially grabbing fuel, refueling, grabbing that money, stopping any orders, and then continuing in the original intention or the original trend of that market. Okay, so what we have here is we have a double top and we have a double bottom. Okay, a pattern that I used to trade, and again, I'm not saying this doesn't work, of course it does, but this is how I trade. And again, I'm just sharing with you guys the value and the understanding and concepts behind liquidity and where we can find them. So what we can see here with this double top pattern, we have 1, 2 rejections from a level, essentially creating some form of resistance, also known as a double top pattern. But again, you can probably guess it, what we've got going on here is a build up of liquidity. Okay, we've got a build up of stop losses above the double top. This could be the first reaction, and then from the second reaction, what we have here is, again, people take the double top pattern as an entry signal, look to go long, as it is considered as a bearish signal. But what we've got is essentially a build up of liquidity and stop losses above this level. So what you commonly see is price creates a double bottom or a double top in this example, but price will spike to the upside and then continue down, and that's because there is liquidity above the double top and price needs to fill and grab orders in order to continue pushing in its intention or in its original direction of where price is wanting to go. Again, exact same for the double bottom. What we have is one reaction, two reaction, creating that double bottom pattern, but essentially creating liquidity below this level with stop losses being set at the resistance or at the support. Price comes down for the second time, people start to see a reaction, they put their stop losses there, they set their orders, but what then happens, price then pulls to the downside, spikes them out, takes liquidity as fuel, look at it or think of it as fuel, and then continues in the direction it's going to be going. Okay, so I'm just going to be breaking down an example of a trade that I took on Wednesday. It was a Euro USD short, banking 4.16%, and again, it's all broken down in the actual Forex Discord community. If you want to check that out, drop me a message or drop a comment down below saying you want to join, or check the description of this video. So we're not going to break down this trade in the lower time frames. We're going to stick to the higher time frames. But again, this is fractal. It applies for all time frames, and the way we entered is again shared with the community. I'm not going to break this down for this video. So what we've done is we've essentially identified a supply level, okay? We've identified a level where price has impulsively pushed, broken structure, and this is now our POI, our point of interest, right? But to add confluence to this level, to add more significance to this level, what we want to do is identify where the liquidity is sitting. And of course, like I've said many times in the beginning of this video or throughout this video, that liquidity is essentially fuel for the market to continue moving. Price is not going to move unless it's taken liquidity, grabbed orders, grabbed money, and then it will continue in its intentional direction, or the direction price is intending to continue moving to. So what we have here, you can obviously guess it, is equal highs, okay? And again, equal highs don't exactly have to meet the same and create a perfect double top, but they're just equal highs where price has created a double top pattern, triple top pattern, or what we can call it is a resistance in the market. If we scale down to the lower time frames, what we would see here is a double top and a resistance being made, okay? So what can we now break down from these 2 wicks, from these equal highs, from what I've just shown you guys? What we can assume, what we essentially have now is liquidity sitting in this area here, okay? Why? Because what we have is a double top pattern, which most retail traders trade, which I used to trade, which is not wrong. Again, it's not trade how you want to trade, but again, I'm just sharing the value and sharing the content with you guys. Here we have equal highs and liquidity sitting above, because this is classed as a resistance. There is retail sellers trying to sell at this level, and this is exactly why we saw this sell-off from this area here. Price wicked up, created that double top pattern, which I've just shown you guys, and then pushed to the downside. But we have not got enough fuel, enough money, enough orders for price to actually continue in its intended direction. So what do we need to do? We need to spike up, take out any orders, grab liquidity, refuel the market, and then it's going to continue down its intended direction. And because this liquidity, these equal highs are actually below our POI, our supply level where we're looking to trade from, this basically adds confluence to our demand or supply, our order block level, as we know that price has to grab any liquidity, fill any imbalances that we've got to the left, and then once it reaches our POI, we know that price has taken out any early sellers, taken out any stop losses that we've got, grabbed the money, grabbed liquidity, refueled itself, and then we can look for the sentiment shift to continue trading in its intended direction, which is to the downside due to this new low being made. We can also look at this area here as a simple range, with basically liquidity is also at the bottom. So we know that when price gets to this area, we've grabbed liquidity from the top side, this resistance here, equal highs being the double top pattern, and there's also liquidity to the downside. So we know that price spiked up, grabbed all the orders here. This then also adds a second confluence to our trade that we took here, because we know that price is eventually going to have to take out all the stop losses from people that were buying at the bottom of this range. We have money sitting in this area. So I hope you guys enjoyed the video. If you do have any more questions, feel free to drop me a message over my Instagram, forex_Loz. This was just a simple breakdown and a few patterns to understand and identify where we can find liquidity and also use it to add confluence to our trading setup. So I hope you guys enjoyed the video. Have a good weekend and I'll see you on the next one.